I seem to be having a challenge with my network on my side. I'm not sure why, but I'm having that problem. Okay. So that is my expectation on USD. Okay. Let's go to another pair. This is what? Another index. Okay. So this is I like how DEX made a recovery. I like how it made the recovery. You can see, let me just show you what I mean, the recovery. You can see there was a huge drop. This was a huge drop. This is on a daily, by the way. So there was a huge drop. And from that drop, you can see now it has recovered, the losses that it made. And remember, I think this was caused mainly because of the threats that were discussed in terms of partnership, between like we discussed last week, trade wars, basically. Trade wars were the main driver of all of this. But looking at this chart now, you can see it's forming some sort of a compression, and judging by this, you can see this was a very aggressive move to the upside, and it went even above these levels. So went above these levels, and from there, now forming a compression. If you're looking at this structure, you can see this structure. It's this candlestick pattern. Okay, so I will expect that when it touches level, it will come back. This is where it's all started. It will come back to just a pullback. A pullback. I'm expecting a pullback on this one. A pullback, but it should give, after a compression, it should give a huge spike to the upside, then a pullback towards this level. This is where it's all started. This level, and then a continuous push to the upside. The reason I'm saying, you can see now, if you're looking at this thing here on the left, you can see from this level, there was a huge drop. There was a huge drop. When the market come back to the place where there was a huge drop, expect another drop on the right. Okay, or especially now, since there is this thing here that is going on, a compression here. This compression is a signal that this bullish momentum is dying out. We might just be looking at the potential drop when the market reaches the supply level. So supply level, potential drop coming back to this zone. That is my expectation on your state. Remember, I'm just a trader just like you. I do analysis just like you. I'm an investor just like you. So everything I said cannot be taken as a financial advice. It is my view on the charts. Okay. So what other pair? Maybe let's take a look at GDP JPY. Okay. GDP JPY. GDP JPY. You are always gonna start on the daily, and you can see this pair what GDP has been doing. Okay. Okay. Let's go on H4. H4. Okay. So judging by H4. So there was a touch break of that level. So we mark that level. You can see that the price is getting closer to that level. Chances are it would go above all of these things, all of these levels. Okay. And you can look, if you look left, you can see there was a drop. Okay. There was a huge drop on this pair. And then it formed a base around here. So this level was some sort of a strong base. And then it made another drop. It made another drop here. And then when the price came back to that base, it made another drop even to this level. And then again, the price came back and then another drop. Okay. So now I'm expecting to come back to this base again. But before it goes to that base, remember you can see the price has been touching this level. Let's change this into a line chart. So these levels, the price has been touching these levels. So now I am expecting it to, let's change it into candlesticks, to go further up, to that base, possible react to that base, and then move to the upside, which is that level over there. Okay. So remember, we've got Bank of Japan decision on interest rate. So it can also add to the level of volatility on this pair. Okay. So that can add. Some people call it petrol to the fire. It might just do that. All right. Yeah. Yeah, that is my thought on GDP JPY. Okay. If you've got a pair that you love us to analyze, please share in the chat box. Okay, even this movement, I like this movement as shows that somewhere. So that is my view on this one. So that's the base. So you're gonna mark that level like this. So come back and then drop. Okay. So where does this begin? Begin here. Yeah. Okay. So possible a push of about close to 200 pips to the upside on the GDP. All right. Okay. And then what's the other pair we can be looking at? Maybe let's look at the DXY, US dollar index. US dollar index. Okay. US dollar index, if we're to mark the high based on what the class we've been running, and we mark this low, sorry, if we mark this low and that high, we can see that the dollar index is now around this area here. It's around this area here. So that is the area. And if you go and check, okay, because sometimes some people say we're looking at the same thing, but we've got different sets of eyes, our sides. If you check here, so there was a bullish movement from here, and now at this level, the market started forming some candlesticks of a doji, and it's the same level as that, and it's a similar level to that. That is 102, 102,750. Okay, and we said this level is between just below 61 in the Fibonacci, below 60. So chances are the market, what it will do is it will do this, push towards to the upside in terms of the dollar. Okay, so this week could possible the week where the dollar is strong. So you can see here, and I'm looking at the reaction in that level. So looking at this zone, I'm expecting a W to be formed here. The price moves to the upside. Chances are it can't even go as far as that level, which was the lower in terms of the hundreds. But it can also do this, break above, and then touch here, even go as far even that area of the Fibonacci before making a drop. So expecting a bit of a positive for the dollar this week, judging by what the DAX is telling us. So a W here based on that, and coming back to this level. So let me just take a look at the what is happening on USD CHF? I just want to see something. Yeah, so if you take a look at this, so if you mark this level here, so this here is what we call a rally. So there was a rally pushing to the upside, and then the market formed a base around here, and then there was another rally to the upside. So this is a rally, number one, a rally here, and then a base around here, and then a rally. So the market came back towards this base here. I think it's the same thing we're looking at in terms of the dollar index. So expecting USD CHF, let's change this into a line chart. So this level here is a significant level. We change again to a chart. So yes, so expecting the dollar to form that W and then move to the upside. And then, yeah, that is where possible you might see a drop. Okay. And if also if we mark this level again from the bottom to the highest level, you can see that the price has also retraced. You can see this level is between the 50 and the 61 in terms of the Fibonacci. Okay, and you can see first time, second time. When it comes back on the third time, it will close below these levels. It will close below 1 and 2. Okay, because there are traders that have had been buying at these levels, and they've got their stop losses around here, stop losses below that low. So chances are, if the market is dropping, it will drop below that low, and it will come back towards this base. Okay. All right. That's it for tonight. Thank you for coming through to the session. Have a good night. I'll share some analysis on Telegram. And please don't hesitate to keep in touch in terms of you've got my email, you've got my WhatsApp number, you've got my Telegram number. So those are the communication channels. And make sure you do submit the homework. I think we gave out the homework. Make sure you submit the homework. I will upload this session on YouTube, and go and watch it on YouTube and just do your own analysis on the pair we've analyzed for tonight. Good night. Cheers for now. That is for tonight.